Global real estate is on fire. Global Cities Home Price Index shows real price growth in local currencies and movement in mainstream house price across 150 global cities, 94% of which saw price increases over the latest 12-month period, up from 85% a year ago. City home prices are outpacing their national markets right now, which registered growth of 10.3% over the same period. Much maligned during the pandemic as the race for space story took hold. The dynamism of the cities is reasserting itself right now, but the market cycle is shifting as large parts of the world move from a pandemic to post-pandemic landscape. We can only hope. There are some heartburn issues out there. Inflationary pressures are surging. The cost of debt is increasing as interest rates track higher. Heightened uncertainty, rising taxes, and more property market regulations. For example, ban on foreign buyers in Canada, so the rate of price growth too slow in most markets, but a sudden shift to negative price growth is unlikely for most cities in 2022, in my opinion. The players, the people with money, are putting their money in real estate, and that's what we're seeing, and that's what we're hearing. Along with key fundamentals such as the economic growth, supply levels, and employment, the speed and scale by which interest rates rise will determine the extent of the slowdown in price growth over the coming year. That said, I can't say it enough. The major players are buying real estate globally right now. We talk about small investors, large investor groups. They have configured their portfolios around real estate. That's the largest chunk of their portfolios right now. I am seeing on average with some of our clients and talking to other insiders across the globe, 30% are being put into real estate, followed by, let's say, 26% in private equity and roughly, 18-19% in public equity. So you take London, UK, for example. We own property there. We're in a position to make another move. Although the UK is experiencing an energy crisis and bills are skyrocketing, London buyers increasingly look at new homes to purchase over the summer and into the fall right now. London is super pumped. Property activity has hit a 6-year high in mid-2022. Reasons include, number one, a weak pound. The dollar-pegged buyers have been in a particularly strong position right now, and they know it. Number two, the appeal of real estate as an inflation hedge. I've been saying this when COVID started. Number three, global economic uncertainty is another factor driving demand. People are worried. They want to get their money out of the market. They want it in a hard asset and be able to hug it. You want to hug that building, right? Number four, international demand is also returning right now. Gradually, still not there yet. While demand from international buyers has grown, it's not yet back at the pre-COVID levels. As it continues to build, data shows, and I've looked at a lot of data, prices in prime central London to strengthen and outperform other UK property. Buyers from the UK, Middle East, China, India, Europe, even the US are putting their money in central London. The number of international arrivals at Heathrow in June was only 17% down on the same month in 2019. That's equivalent drop of 87% last June. Regional differences remain due to varying COVID restrictions, with travel from Asia still, half the level it was 3 years ago, roughly. People are coming back, though. Number five, super pumped demand has been supported by the relaxation of the travel restrictions and the continued, mainly, this is the big one, downwards pressure on the pound. So the number of prospective buyers registering their interest in buying new home in the capital over the first 6-month periods of 2022 was 46% higher versus H1 2021. And 83% higher than the 5-year pre-pandemic average from the first 6 months of the year, roughly 2015 through 2019. So the spike in buyer inquiries also reflects the fact that several launches which were put on hold through 2020 and 21 have since been brought to the market and shown a lot of interest. I've always said this about the central bankers. Everything comes back to them. So the central bankers are, they're performing a tricky balancing act, and the ensuing volatility in the financial markets makes real estate look attractive by comparison what they're doing, right? Property's reputation throughout history as an inflation hedge gives it an extra appeal, while the prospect of rising borrowing costs is injecting a degree of urgency into the market across all price points right now. From what we're hearing, average prices in prime central London rose 2.4% in the year to May as the market continues to steady recover from a 6-year period of political uncertainty and tax changes. And I went through those tax changes in another video. So the increase above 10 million was 3.6 over the same period. So the number of sales in May 2022 was the 6th highest total in 10 years in London, and the number of offers accepted was the highest in a decade. In a decade. What recession? COVID? What? The players are buying. The same can be said at the very top of the market as well, where there are even more reasons for buyers and sellers to act now. There was 155 transactions above 10 million in London in the year of April 2022, roughly. Whole market data shows that was an increase of 19% on the previous 12-month period and the highest total since roughly 2015-16. So the number of transactions, this is incredible, above 20 million was particularly strong in the 12 months to April. There were 46 sales, a number that has only been executed once in the last decade, roughly 2014. So property's reputation as an excellent hedge against inflation, it gives it extra appeal right now. With people are worried about the prospect of the cost going up for borrowing. A lot of cash buyers out there. I think smart investors have been betting that the government will not get things done right, that inefficiencies will continue to dog the supply chain and the prices will rise. You want the government to save you, they won't. Smart investors know they won't. So why not then, invest in real estate, invest in companies that will be charging higher prices. Consumer staple companies, whether they sell online or in the stores, will not face the same, deflationary pressures as other industries. In China, for example, consumer companies have, enormous pricing power. For example, last decade, in the wholesale price of a bottle of Mantai has only gone up. Last price in January 2018 was up 21%. So the new homes market is now facing the same pressures as the wider housing market, where high inflation and rising mortgage costs are expected to lead to a moderation in price growth and demand later this year a little bit. A reduction in development starts and the completions could weigh on volumes of new homes specifically. So, you're seeing smart companies right now, and I've talked about pricing power, and they're passing it off to the consumer. You got to look what's going on in China and think about this smartly and what companies to invest in. There's still great opportunities out there. And it's in these major cities where you're watching where the foreign money is flowing. Central London is a big market right now. People are buying there, and people still believe in it, and they're parking their money in Central London. They've had some issues with politics, of course, and rising inflation. But these people that are buying there don't care about inflation. They don't care. It's not going to affect them. They don't care about their heating bill. But you're seeing the global players move in these markets, and it's interesting how it's all playing out. So we're not just here to talk about real estate. We actually own real estate globally, and we have documentation to prove that. So we're making some moves in London. And if you have global real estate needs, we have a portfolio of properties that we can prove that we own. And we own in 5 countries and 7 states. And we're not just real estate brokers in multiple states. We are active investors, active property managers. We're always looking for deals. We are probate experts, probate certified. We are looking at distressed assets, foreclosures, and working with people in multiple states. And a lot of what we're doing right now is outside the state of California. So I think we have a unique business model at the McClone Brothers and the Global Estate Property Group that what we're doing. And we are making moves globally. We have a solid understanding of these markets. We're always looking at them every day. We partnered up with people in other countries. And I think we have a unique value proposition, what we bring to the table. And coming soon, new property launch video in Mexico, and something we're working on in London. So more to come. But global property, people are buying real estate. Don't listen to all these fake articles out there. What's going on in the media and real estate? People, investors are buying up real estate right now in major markets across the country. You know, it's all about cash flow. If you're buying a building for $3 million cash, I don't care if that building goes down to $2.4 million. I have the cash flow. It's always eventually going to go back up. Interest rates are still historically low. And I'm not against the stock market. I have money in the stock market, but I think there's no better way to put your money in assets and look at those assets and collect that cash flow. And those assets will eventually go up in value in a down market. Take care.